This is our Forex blog for August 30th, 2011, and what we want to do each day is trade the ones that are strongest against the weakest and trade the weakest ones versus the strong. Today, the dollar and the yen were strong. A lot of days they are either strong or weak together, and it's pretty clear to see that the yen was much stronger than the dollar. And the daily, weekly, monthly trend is up in this one. The euro was weak at 2, pretty much until 6. We have a weak Swiss from 5 to 7. The pound, had more intensity in the down moves than the up moves, and so you're basically looking to sell that most of the day. When this one's green and this one's green, you're waiting for the up move or sideways consolidation, to break. But clearly, the euro was one of the weakest, so you want to sell the euro yen pretty much from 2 all the way to 6 is when it stopped, being weak. So if you look at the chart, here's 2 o'clock. You really could have got into this trade at the very beginning of the move. Our tools don't always predict the move before it happens, but every once in a while they do, and today it did. And even if you missed that first move and you got a little bit late on this first pullback here or after the sideways consolidation, there was plenty of movement left to profit from. And you can get into these trades and use IntelliStops to get out, use them to get back in. It would have had you out here for another 40 or 50 pips, 35, 40 on the first one and 50 on the second. But basically you're using the currency meter to sell the weak ones versus the strong ones. Now the dollar was weak from 1 to 2, but other than that it was relatively strong too, so you could have also sold the euro dollar. There's just so many good trades. Here's 2 o'clock, it fell. Counter trend trade, you sell the pullback, you made a little bit. Sideways range breakdown, you made money. Nice little pullback here and here and here that you also made money on. And one of the best ways to catch some of these entries that you may not want to do on a 5-minute chart is to use a range chart. Let's put a 6 pips per bar range chart up and look at it from 2 until about 6 when the euro's lost its incredible weakness. And on a range chart you really have incredible opportunities. Here's 2 o'clock. If you miss that first move, you have this nice little rectangle pattern here, you have this nice little pullback here, and even if you went short right here with the pullback, the bar went red, you go short, you lost 7 or 8 pips, you shorted again, and you either got it back plus another 10 or you hung on and it reversed. You have this nice little trend line break here. There's just a lot of good trades when you're using the range bars. Let's look at the euro yen, which was even more violently down. You oftentimes don't get pullbacks on some of the strongest and weakest trends. However, on the range bar charts, you can find some opportunities. If you miss that 2 o'clock sell, which really looks so beautiful on a range chart because it's in a nice little rectangle pattern right here and broke down, you do have this kind of consolidation area here to go short, or when it double bottom right here with no bounce whatsoever, when it breaks down from there, just like this little rectangle pattern, those trends are very likely to continue. And whether you took out 10 or 20 pips, another 20 pips, another 20 pips, another 20 pips, or just hung on to this trade and used the Fibonacci profit target off the first wave as your exit. Maybe you got out of that trade here. You may or may not have caught that last wave there, but the range charts really give you a lot of opportunities to enter trades on. The pound again was weak most of the day, and anytime you see extreme weakness followed by a little bit of strength and that strength goes away, it's pretty safe to assume that weakness will come back, around 8:30 here. What's the strongest currency between these two at that time? That's clearly the yen. So at 8:30 you could be looking for some, well, even before 8:30, let's look at the pound yen selling this one today on the range chart. Specifically at 2 o'clock when it broke down, you might have gone short here and got out of this with a break even or a small win. Short here, made money. This little rectangle pattern here fell about 15 pips, another rectangle pattern breakout. And the farther down it goes, the riskier it is to sell. After it's been down this much, I would wait for a 20 or 30 or 40 pip pullback wait for it to run out of steam, maybe do something like this, comes up, starts to go down, tries to go higher, then it can't, doesn't really break out, then go short. Your odds go up. So looking at this one at 8:30, you saw that the yen was strong, the pound was going weak again, and you might have gone short right here with your stop right above this little consolidation area, and then it finally, a few minutes later, broke down. You have the Fibonacci profit target level as a guide. You maybe only made 15 or 20 pips on this trade, but still another winner, even towards the end of the move. Look at the New Zealand. Mostly weak today with occasional strength, but right here at 9:30 it was the strongest one, and all the time frames line up. That would have been another good one to trade against the pound. I don't know what a proper range bar chart is for the pound New Zealand, but at 9 o'clock this thing's just going to tank, and you saw it slightly after 9, maybe 9:10, right here on this bar, and it had another 100 pips to go. Let's just put on a 9 pips per bar chart on this. Let's say you missed that first drop. When one currency is the super strongest and the other one's the weakest, and pretty much all the time frames line up, you may have missed the beginning of this. I think, well, let's check the exact time that it showed up as extremely strong. 9:25. And this one's actually extremely weak at 8:50. So you might not have even been looking at these two pairs because they were both weak. But after 9:25, there was clear signal. Here's 9:25 right here. So even if, on a range bar chart, you can actually find patterns where you either get a little bit of a pullback or a nice little kind of rectangle pattern like this. Normally I wait and I want a 5-bar up and down rectangle pattern, but this was probably the strongest pair at that time, and it's pretty likely, because you are shorting one of the weakest pairs, it's probably likely to go down to the fib targets. So you're risking a really tiny amount. Put your stop a pip or two above the high here to make at least 25 pips. You risk 10 or 12 pips to make 25. In this case, it went down and kind of stalled at the second fib target. You made 50 pips while risking maybe 12, and that's a good risk to take. If it works even half the time, when you're selling the absolute strongest versus the absolute weakest, if it only works half the time and you lose 10 or 15 pips and you make 30 the other half, you've still made money. And when you catch a 50 pipper like that, it really improves your trading. You can see the Australian was also consistently strong all day. You could have sold the pound Australian too. A little bit before 6 it became strong, which is right around here. And if both currencies have a little bit of strength at that time, you're basically pulling up the chart and you're waiting for price to prove it to you, and that's breaking down and going lower. Right here you're short. You can see it fell about 35 pips. You have this nice little pullback right here. You might have went short right here, and you might have actually lost on that trade. It's debatable whether your stop got hit, but you probably did. When it broke down again, you go short. Guess what? You got that loss back, plus more. Most of the time, when you're trading these strongest trends, they will go to the fib target. So, you made about 40 pips here, and maybe you lost 20 the first time. You netted 20 on that trade. And anytime you trade a pair that has a wider spread and a wider volatility, you're going to have to trade tinier number of lots, because you have a wider stop. You can see the Swiss. Now the longer term trend of the Swiss is down, so when you see some strength in the Swiss, you can certainly trade it, but it's not as likely to go 50 or 100 pips because it's going against the longer term trend. The euro was really weak. The Swiss was strong up until maybe there's a little bit of weakness here. You can assume that weakness, you're looking for the strength to return, which it did, and then it immediately went back to weakness. So if you don't see a half an hour to an hour and a half of strength, it's pretty safe to assume that whatever the counter trend forces that were causing the Swiss to be strong are over, because the longer term trend's down. But from 2 to 4, certainly you could have sold the weakest euro versus a super strong Swiss as well. There's 2 to 4. You can see, you know, this nice little pattern right here where it broke down. It just trended right down. Sideways rectangle pattern. If it had broken down there, you would have went short, but it didn't. This one had a counter trend trade up. Anytime you have, you know, 2 to 5 green bars, the first red bar, you short it when it goes 1 pip below there, with your stop right above the high. And this one, you know, continue. This one, if you missed the first move down, went right to the fib target down here at 85. You short right here, you made 65 pips while risking maybe 10. And so that's the real benefit of using the currency meter. When the trades work, they're oftentimes absolutely enormous, and your risk is small. And you know, really, that's the only secret that people who make money trading have, that people that don't do. They have small losses and small wins, and usually more losses than wins. Good traders sometimes have more losses than wins, but their wins are, you know, significantly bigger, many multiples bigger than their average loss. As you can see, the pound was also weak from 2 to 4 when the Swiss was strong. You could have also sold the pound Swiss. So there's many opportunities today to find some really huge moves. Here's the 2 to 4 o'clock. Notice again, if you miss that first move, you have this nice little rectangle pattern here, which fell about 20 pips. You know, you might have actually gone short right here with your stop above here and got stopped out. And then you have the nice pullback here, you're short again, and that one, you know, whether you took this trade or not, if this was your first trade, you start off with a loss, then you get in again, and you got a nice little 40-50 pip move here. Here's a little pullback and a little ledge. You know, anytime you take a risky trade right near the lows, first sign of it not going lower, get out, but you could have made 20 pips on that one as well. And you also have a nice, beautiful little trend line pullback right here. Plenty of, you know, amazing trades last night. Not all of them worked. But again, small losses, big wins. It doesn't take a rocket scientist to use our tools now, because we've made them even clearer which ones are the strongest and weakest. The yen, without any doubt, was the strongest one. So you sold the pound yen, the euro yen, the CAD yen at times when it was pretty weak right here. And focus on the ones where all the time frames, or most of them, line up. Here's the CAD yen. I'll finish the blog video today using CAD yen. This got weak at 230, and 9 pips per bar is too much for this. We'll go down to a 5-1. Here's 230. Actually, the yen was so strong. If you have two currencies that are strong, but one is stronger than the other, it's still going to cause a move down. So at 230, when you really started focusing on this, you have this little move here, and this is really the worst example of the day. It only continued a little bit. You can see this weakness only lasted an hour, then it got strong again, and that's why it kind of chopped around. You know, you don't want to trade two green ones together or two red ones together, because you oftentimes get choppy action like this. One time, or 1 minute, one currency's stronger, slightly stronger than the other strong currency, and you know, therefore it goes up, and the other minute the other one's slightly stronger and it goes down. But you tend to get choppiness.